Hello everybody and welcome to this new market daily update. Today we are going to have a look at oil, okay, crude oil, the famous crude oil that that dropped so hard. Okay, what I want to show you here is that we have a very good buy opportunity on oil. Okay, so I didn't want to show you to show you this chart before before we get the confirmation. Okay, here is what you have to look for. Here is what you have to look for. It's very easy to spot, but anyways, so here we had a first a try. Okay, so let's write it down. First breakout attempt. Okay, we had a first breakout attempt. It didn't go very well. You agree? Okay. Then we had second breakout attempt, right? Here. Okay. Let's see. Then here we didn't have like a double bottom or even a triple bottom, but still we are very close to have a buy opportunity. So where should you buy, or where should you should you get ready to buy today, or should you get ready to buy when should you get ready to buy? I'll show you what's going on here. So what's going on is that we're having, let me check. We're having a compression of oil, and what we are getting ready for is price to explode to the upside. So just remember this, just remember, this forecast. So this forecast, you can just save it and you can look at it maybe in a month or so and say, okay, I didn't make $10,000, $20,000, $100,000 because I couldn't trade oil, because trading oil is not easy. I mean, you should be capitalized. I mean, you can't trade oil with a small account, but right now we are just correcting. Okay, so we are just making a correction, and what you can expect from this correction, let's look at even the 15 minutes, so we can have a look at, we can have a better look at the correction and what's going on. Let's have a look. Okay, so right now let me just do some, I will just show you something. Okay, let me just show you something. I show you where this correction could go. I mean, the lowest it could, not the lowest, but potentially this correction where it could lead us. And as you can see, the correction would lead us to exactly 1.6 18, and this is a confluence. I will write it also, confluence. That's why I'm better. I think I'm better than average traders, because I use confluence, and confluence is the most. I mean, this is the best trading strategy. That's why I'm so confident. Even if I lose, if I lose some trades, I know that if I just like sit in front of, I mean, if I sit and look at my charts and try to find confluence using like a couple of methods, because my method is like it's a blend between several methods, but I have a main method. Okay, I'm not showing my method here, I'm just explaining, and I know you've heard this thing again, this thing like before, but what I'm saying is that you should wait right now for price to correct. Okay, so you should wait for a correction. So if you get this correction, price can can give you a much you can buy at a much lower price. Okay, 13,750. But there is also the other scenario. If we close here, like sorry, if we close above, that's why I say that trading is about not knowing the direction, it's knowing what to do depending on how like price evolves. So if it closes like above 1730, you should clearly look for a buy opportunity. So you should look for a buy opportunity either like lower or higher, but never in the middle, never in the middle. So confluence is like extension of Fibonacci. We have long term trend line plus, okay, plus Fib extension. So always look for two confirmations at least if you want to get a high probability trade. Also, what you can see that I mean, if we reach the 1160 here, we'll be touching the 2.618 like Fibonacci retracement, which means that we would have a much higher quality trade and at a much lower price and at a much at even less risk. Okay, this is a very low risk trade. Okay, if it goes even like further down. But of course, if it goes up, as I said, you just wait for a breakout of the 1730 and price should just stay above that level, at least 2 or 3 candles. Then you can like start looking for a buy using techniques that I've shown you like in some of these videos, like inside bar breakout, or or the second bar, I mean the doji bar breakout, etc., etc. So price action, you should use price action to look for an entry for an entry I mean for an entry price. Okay, so use Fibonacci, use like Elliott waves, even if Elliott waves is not very I mean accurate, because Elliott waves often will give you the right, I mean the right shape, or the right like the right correction shape after the fact. So what is better than Elliott waves, or what is more I mean reliable, is to use Fibonacci retracement plus simple support and resistance levels, and maybe with one indicator that I can talk about like in the next couple of days. Okay, so you have a good night and I'll talk to you soon.